Welcome back. President Trump vowing to make the U.S. the crypto capital of the world. The president's team making good on those promises, including Securities and Exchange Commission Chairman Paul Atkins, who is pushing to make cryptocurrency more available to the everyday investor, focusing on blockchain as well as deregulating the financial markets. We want to talk with the chairman in his first television interview since his confirmation as chairman of the SEC. Paul Atkins joins me right now. Mr. Chairman, thanks so much for spending the time with us.
Well, thank you, Maria. It's great to be with you again. Thanks.
And, you know, we've spoken so much on this program about how Gary Gensler's Securities and Exchange Commission really handicapped growth and strangled markets because of so many rules and regulations. Let's start off with your priorities. How do you want the SEC to look different in 4 years, and what are you focused on most right now?
Oh, well, thanks, Maria. Well, it really is a new day at the SEC. What we're going to be doing is focusing on making rules of the road understandable and clear for people. And one of those areas is digital assets, cryptocurrencies and whatnot. And so we're working with our counterparts on the Hill and in the White House and at the Commodity Futures Trading Commission to do just that. And the good thing is, two of my colleagues as commissioners used to work for me as a when I was a commissioner about 15 or so years ago, and they got a head start right after inauguration to focus on crypto markets and crypto assets. Hester Peirce is leading a task force on that, and Mark Ueda is focusing on other priorities as well. So the getting the rules of the road in the digital asset space clear and for innovation to go forward here in the United States has been stymied for too long. And we're focusing on capital formation, the IPO markets, and have been have not been as robust as they have been, say, 20 or more years ago, and that's again because of many issues, regulation, and litigation issues, and that sort of thing have discouraged people from going into the markets. And then finally, in the marketplace itself, the exchanges and trading rules need to be brought back to basics, and there's too much opportunity for gamesmanship in those particular aspects. So those issues, I think, will get us back to a robust and a marketplace that will be servicing investors ultimately for the best and helping American economy to grow and create jobs.
Yeah, that is a wonderful list, and I want to go through some of those because one of the issues with regard to the crypto developers and the overall market was almost too many players overseeing things, right? I mean, and there was
On how do you make that distinction? This is one of the confusing points that's led to litigation, led to regulation by enforcement all under the Biden administration, where Gary Gensler, then the SEC chairman, said, just come in and register. All the existing laws work just fine. The answer is they don't. We've created a fit-for-purpose framework that we call the Clarity Act, which makes that determination. It will allow innovation to come back to the U.S. It will give consumers full protection on what's a good digital asset and what's a bad digital asset in terms of who's offering it, how they're regulated, how they can exchange it, how they can keep it in their digital wallet or with a custodian.
So, Mr. Chairman, in that vein of simplifying the oversight, would you support a merger of the SEC and the CFTC?
Well, Maria, that's a great question. I will do whatever Congress decides, obviously, on that, the Congress and the president. There is the lines are not clear, unfortunately, and for many years that stymied the innovation of new products. I mean, going back 20 or 30 years. So I look forward for Brian Quintenz to be confirmed and appointed as chairman of the CFTC. He's a great guy. I think we can really work together very closely, and so let's see how things go, but whatever Congress and the president decide with respect to the agencies, I would support.
I mean, you made a comment recently about helping lots of industries in terms of the blockchain. People don't understand the impact, but it is broad. And we talked before this interview about, for example, the auto industry in terms of how to create growth and make things move better, more progress with regard to the blockchain. Can you walk us through how things can get better in that regard?
Great question. So this is more than just cryptocurrencies. The innovation and the potential use cases of the blockchain and distributed ledger technology, I think, is really great. So, for example, for car titles and other evidence of ownership, to put it on a transparent type of platform, such as a blockchain, can save a lot of money and make things much more efficient and less costly for governments, for ultimately for taxpayers and consumers alike. So those sorts of things. Bernie Moreno, who's a great senator from Ohio, in fact, did that before he was a senator, for example. So there's so many ways, I think, that if we can bring clarity to this area so that lawyers can advise their clients as to what is proper to do and not, and what they have to do. Things have been so unclear, and like Chairman Hill was just saying, that in the past the SEC has invited people to come in, but there are a lot of stories that as people came in to talk to the SEC, they either got no answers, or even worse, by the time they got home, they might have had a subpoena in their post office mailbox or on the doorstep to respond, in an enforcement context. So those sorts of things, we're already changing them, and our goal is to have good rules of the road, good guide rails, so that people know what they can do to go forward. I think we have the authority to do that. I'm hoping that these two bills, the Clarity Act and the Genius Act, will make it through Congress and to the president's desk, and that he'll sign them. But in the meantime, we will go forth and help to bring clarity to these markets.
And in a similar vein, needs clarity in the IPO market. There's a bit of a broken situation there, even though we've just seen a couple of successful IPOs. But you say you want to get more IPOs to the market. How do you do that? What are the priorities there?
Well, again, I think part of it is just the whole atmosphere in the marketplace there for IPOs. There are a lot of impediments or ways that people are discouraged from becoming a public company, and one of those is the litigation threat. Secondly is just the whole cost of going public with, trying to put your documents in order and then go through, the whole process. And then third is once you become public, there are many issues, among which is corporate governance and securities or shareholder proposals and that sort of thing, that makes it very just costly to be able to be a public company. So those sorts of things I think we can address in the upcoming months and years ahead to bring, again, sort of certainty to people and have the rules of the road such that there's not a lot of excess costs to doing that. Because right now, a lot of it is there's a lot of private capital out there and private equity firms and elsewhere that have, make it so that people don't need to go to the public markets to raise capital for their new property, plant, or equipment. And so we intend to try to change that.
Yeah, and in fact, either they don't need to come to the public markets or they'll go to another public market, right? We're seeing some businesses go to Dubai and other areas of the Mideast. We're seeing them go to Asia as well. So there's that. International markets are getting the business over America in some regard. And you mentioned the proxy advisory firms. I mean, some people are saying that that's contributing to the decline in public companies, which have decreased from 7,300 in 1996 to 4,000 today. What can be done in terms of a regulatory clampdown on some of these proxy advisory firms that have tremendous influence over shareholders and shareholder decisions?
Well, that's a whole nother discussion that we could have, another time, because it's just there are a lot of different factors that play into that. But let's just say one is that there should be rules that focus on the conflicts of interests of these particular firms and how they do operate. And then secondly, I think we have to focus on issues from the perspective of the asset managers who are operating in that area. They also need to be clear as to, are they interfering or trying to influence corporate governance of public companies when they're supposed to be passive, and how they're getting their advice and how they're doing their voting, because they're using other people's money in some cases here in the past several years to maybe not be in the best interests of their investors, but more in their own parochial interests. So
it's such
we
a
will
great
take a
issue
look
to
at
take
that.
on. Yeah, it's such a great issue to take on, Mr. Chairman. Look, I've got to ask you about our adversary, China. In the middle of this conflict in the Middle East, you see China once again undermining the United States, and they undermine the U.S. on so many levels. At a time that we've got about, 200 or 300 companies listed on exchanges, but some might say as many as 5,000 Chinese stocks that are actually traded, including A shares. This is a great opportunity for the Chinese Communist Party to get itself funded by American investors. So I wonder your thoughts on some of these companies that are traded and listed on our exchanges. And by the way, some of them have already been sanctioned. Some of them are on blacklisted, blacklists of the United States. What are your thoughts on this? Do you believe that there is room for the United States to pull that economic lever to push back at Communist China and stop the funding by American citizens and American investors of the Communist Party of China?
Well, Maria, again, there are a lot of issues there in that area. But first of all, we've taken the first steps here already to address some of the issues around what we call foreign private issuers. That means ostensibly private companies in the Chinese sense, but others as well, who use the United States as their major trading area for their securities, even though they are headquartered and have their official corporate side of incorporation elsewhere. And so in the old days, the SEC has given a much more flexibility to foreign private issuers to list in the U.S. and trade here. But the idea was that they had a robust system of regulatory framework elsewhere. There are a lot of instances now that we've seen where there are many companies who are traded mainly here, and this is their situs of regulatory oversight over their securities, but they get these special dispensations that are not, so they're not treated just like American companies. So we've just issued a request for comment and on that, and we will be focusing on that here in the coming months to, I think, straighten that out and make sure that companies who are listed and traded here are overseen properly by the SEC. And we'll look at, obviously, we're looking all the time at fraud that goes on and pump and dump schemes. There was one that was in the papers just today about a Chinese company there. So those sorts of things are what we don't want to hear about, obviously, and what we will take very firm and swift action to address.
Oh, and I know you will. I mean, we've spoken years ago on your incredible work regarding Enron, and I want to applaud you on your work there. But, Mr. Chairman, we've been talking about the big, beautiful bill this morning, and of course, we are about 2 weeks away from the actual deadline in the Senate. Are there areas of that bill that you want to mention in terms of also aligning with your goals for a better backdrop for American investors today?
Well, obviously, what they're doing in Congress and what the president has asked for, hopefully will be good for the economy. I think it will be, and bolster because the underlying economy obviously affects the securities markets. There's one aspect there that has been inserted that I think is, it speaks towards regulatory rationality and trying to, lower costs, and that's focusing on the Public Company Accounting Oversight Board there to fold that into the SEC. The PCAOB is overseen by the SEC, and there have been questions as to whether or not we could handle that aspect of what that particular agency does. I think we can, and we would be able to incorporate people from that agency and do it probably more efficiently, less costly, ultimately for the investor who pays, of course, for regulatory types of operations. So that part doesn't concern me, but anyway, we'll leave that to Congress to decide what to do, but I look forward to working with them and to digging into all these issues.
Mr. Chairman, what an incredible opportunity for you to oversee the deepest and most liquid markets in the world, the envy of the world, the U.S. public markets. Real quick on private companies, I'm hearing increasing interest in terms of ordinary investors wanting to invest in private companies. Is that on your list of priorities?
Yes, we will be addressing that as well. There's a lot of demand from both sides, from the investor side, and then obviously from the folks who are putting these products together. But it has to be done in a proper way. There have to be very clear guardrails around that to protect investors.
Mr. Chairman, it's great to have you. I know you've got so much on your plate. We so appreciate you walking through all of these complex issues with us, sir. Thank you.
Super. Thank you very much.
Paul Atkins is the chairman of the Securities and Exchange Commission. We'll be right back.